Hi there. Rivian, with a market cap of 10 billion and over 9 billion in cash. This company has recently reported the results for the first quarter, Q1 2024, and the stock price, as you can see, has declined or is about to go down. As you can see, pre-market, the stock price is expected to go down over 6%. Why is that? Because if you look at the analyst estimates, you can see that the revenue is expected to grow a lot in the future. From 4 billion to over 25 billion by 2028. And that would be great, as the market cap is about 10 billion, plus they also have over 9 billion in cash. This company may grow a lot in the future. But of course, you also have to look at their profits, if this company can become profitable, and then to assess the final fair value of Rivian, if it's a buy at the current level or not. So, when you look at the results for Rivian Automotive, you can see that for the first 3 months, first quarter 2024, you can see here the number of production and number of deliveries. And as you can see, their deliveries have declined from previous quarter, Q4 2023, December 2023, and also September 2023. As you can see, their deliveries have continued to go down from 50,000 to 13,000. And you can also look at their revenue. The revenue has declined in the last quarters from 1.3 billion to 1.2 billion for the last quarter, Q1 2024. And that's why this company, Rivian, is about to go down over 6% pre-market. And of course, year to date, the stock price is down over 51%. This is quite bad for investors. Now, if you wonder why you see this decline in their deliveries and also revenue, well, we can look at interest rates. As they went up from 0 to over 5, people who want to buy a new car, they have to pay a higher interest. This means higher expenses, and they can't afford to buy a new car, especially an EV car. Now, if you look at the future outlook of this business, because as we've seen, the revenue is expected to grow a lot, then you might say that maybe Rivian will have a decline in 2024, and then the growth rate will come back. It will continue to grow more in the future, as you can see the estimates. And if you look at the opportunities, you can see the upside, that they have good tailwinds from the EV market. It is expected a compound annual growth rate over 15% from 2023 by 2032. And that will be quite a lot. They have good tailwinds. The problem is if they can become profitable, of course. Another good thing about this company is that they have some cash. If you look at their balance sheet, you can see that Rivian has 5.9 billion in cash and cash equivalents and 1.8 billion in short-term investments. And if you do the math, their total cash is about 7.8 billion. And of course, they also have some debt, about 4.4 billion. If you subtract the total debt from their total cash positions, their net cash is about 3.4 billion. And if you look at the market cap, you can see that their final net cash position is not that high. However, it's good that they have some cash. They can rely on it. Because, as you've seen, they had no profits and expected more losses in the future. So they will need more money to expand their business. But be aware that if you rely only on their cash, you can see that their cash position has continued to decline from 7.8 billion to almost 6 billion. So you have to be aware that this company is burning a lot of money as they have high expenses. So this is the upside for this company. good tailwinds from the EV market, especially in the US. They have some cash, so they can survive for this year. And now let's see the risk. The first risk is about dilution. If you look at the number of shares, you can see that it keeps growing. Not that much, but as they continue to burn that cash, they will need more money. And to raise more money from investors, they will issue more shares. You can also look at the number of shares. You can see that in the last quarter, the number of common shares have increased from 930 million to over 978 million. So you have to be aware that you'll have more dilution in the future, as this business has no profits and they'll need more money to fund their operations, even though they have some cash of about 7.8 billion. So that's why you have to be aware of this risk, dilution. The second risk is that they reported a decline in their deliveries and the number of deliveries, as you can see here, and this may continue in the future, next quarter, and also for the entire year 2024. Because as long as interest rates keep stay high, around this level 5%, people can't afford to buy a new car, especially an EV car. And their deliveries are likely to stay flat or go down even more. So you have to be aware of this risk. If interest rates go down to zero, let's say next year or at the end of this year, then you can assume that Rivian will go up. I mean, all car companies will go up. And then the last risk is that this company, Rivian, may not become profitable. And if that happens, then the final fair value of this company will be zero, null. So as you can see in this image, you can see the analyst estimates, what the market expects from Rivian. You can see easily that the revenue is expected to grow a lot in the future, but they're expected to deliver no profits, no earnings. By 2028, it is expected to last over 1 billion, 1.4 billion. And this is quite bad, because if they don't make any profits, then this company has to find a way to fund their operations. And the easiest solution is to issue more shares, to raise money from investors. But this is bad for shareholders because they get diluted. They lose in value over time. And the stock price in the long term will go down. So you have to be aware of this risk. And if you want to value this business, based on the analyst estimates, their earnings, you can't. Because it is expected only losses. So you can only rely on their cash position, about 3.4 billion, their net cash position. You might say that as Rivian is expected to grow its revenue by over 20 billion, they might succeed to make some profits, to improve their margins and deliver some earnings. This can happen. There is also probability. But as I said, always focus on the risk first. Because if you expect that Rivian will deliver 25 billion in revenue and they might report a profit over 1 billion, plus if Rivian maintains its growth rate, then the market cap can go to over 20 billion. From the current level, you can have a double, but only if this company can become profitable. So you have to assess and also be aware of the risk. If this company can deliver some earnings, positive earnings, because as you know, they also compete with other companies, Tesla, Lucid, Ford Motors, and of course, Chinese companies. Of course, in the US, Rivian might be protected due to regulation. But as I said, you have to focus on the risk if this company can become profitable. If you believe in this company that they can succeed, their cars are amazing and people want to buy them, then the stock price will rebound from the current level, especially when interest rates will go down. They only have to survive, to improve their operations, and of course, not issuing a lot of shares in the future, from the current level to go over 1 billion or even more. If they can do that, reduce their losses, improve their margins, then investors will do well in the long term. So it's up to you if you want to take this risk. Be aware that this is a risky investment. It's not easy to make money with Rivian. So it's up to you. And if you have other questions about this company or other companies, please let me know in the comments.